Well, welcome back, everyone. Weren't those exceptional classes with Rob on his ITP tools last week and this weekend in particular? Hope folks enjoyed them. I know I did. Using those same tools, you saw Rob produce some pretty outstanding results in his live trading. And I'm going to share a little with you today on some of the live trading I did live on screen right in front of all of the active trader room members from start to finish. Now, these outstanding results are not things that we can guarantee can happen again. All trading comes with risk. You have to consult your registered financial advisor before making any trading decisions. Now, I want to share with you a little bit about how we see markets unfolding today, what it implies, and what our tools allowed us to look and hunt for in this market morning. You're looking at a daily candlestick chart of the S&P 500 ETF, the SPY. Each little bar is 1 day of trade, and we are in a downward sloping trend channel where the center of that trend channel is that linear regression center, 1 standard deviation, 2 standard deviations above, and likewise 1 standard deviation below, 2 standard deviations below. Now, what we've seen in markets as of last week is we poked above the 1 standard deviation above the VWAP, came back down and effectively tested, not the VWAP, the linear regression channel center, tested it, bounced off of it, and in today's trade, we were stuck in the mud for a little bit, but then we got going off of the bottom of that tail of that candle and pushed up. Now, we pushed up through some of these colorful lines you see on the screen here. They are weekly pivot lines. The center of the pivot range with the thicker lines I affectionately call the mattress. Now, getting above the mattress means we're putting something to work, putting money under the mattress, putting it back into savings. So we've effectively got the primary index that's watched by most of the world above the top lip of the mattress, but the problem index, the NASDAQ, has yet to actually emerge and take a big breath of all of that fresh air up over here. The problem has been yields on the rise, which continued in today's trade. The long-term U.S. Treasury ETF came down. The 10-year yield went up. It went up about 1.4%, closing over 4.2% in today's market. And that risk continues to dominate market participants' minds into elections, into the Wednesday afternoon 10-year bond auction, and of course into the CPI data that comes out this Thursday. Now, this chart still being on the back foot, but seeing the equity market struggle bust its way to try and push in, the Qs in particular, to push into the mattress, was indeed inspiring. However, not quite enough yet to say the bill is a hit and we are ready to go. Well, we do have the Russell above the top lip of the mattress. We do have the SPY above there, and the Dow has seen some exceptional performance of late. And we do have a U.S. dollar that cracked down last Friday, carried forward with its decline today, but not because of policy or inflation reasons, mainly because of political and financial theater in the UK. The pound rising was what helped push the dollar down today, and as such, we didn't see a whole bunch of response from precious metals. Precious metals were, in fact, more so on the back foot than not. If we take a look at things like silver and gold, they took a bit of a pause today, silver in particular at the top of a recent sideways range that it's been going through. Now, in order for us to get a good grasp on where this market may be going, we certainly have to have a view on the dollar and a view technically on the dollar. It's still set up to go down, but oversold enough to give us some dead cat bounces in the day or days ahead. The technical view on the long-term U.S. Treasury ETF is quite negative still, with the potential for even lower lows than we've seen back over here on around October the 24th. So the risk to the downside on the long bond does suggest that yields go up. Typically when yields go up, well, the dollar tends to give us bounces, so a dead cat bounce on the dollar would not be strange. This can keep a ceiling on things like silver and gold in the near term until we've got data that says otherwise or technical behavior that supports it otherwise as well. Now that would mean something like the ES, the S&P E-minis, which is a representation of the S&P. It's a futures contract on the S&P 500. You can see it in a buy zone on the daily chart. You can see the ITP fast trigger above the zero line, but losing a little bit of that bullish momentum. And you can see price action has made its way in today's market into the upper half of that channel. The channel consists of the three lines, as you see Rob teach you about day in and day out. Now, the fact that we're in the upper half of the channel and the fact that we've been able to get back above not only the fast but the slow speed line opens the door to potentially rising to the top of the channel. We are in a buy zone. We do have the spike tools, fast spike coming up from under the channel through the center, bullish, and the slow spike making a turnaround at the center of the channel, looking to cross above its signal line, potentially bullish as well. With the core trigger losing that bearish momentum and grinding its way up, the fast trigger being above the zero line, one, not two of the momentum conditionings, and of course we do have our candles in blue, not just yet ready to go green and up, up and away. We need to see price action prove worthy enough for up, up and away. And what does that mean? Well, I need to see signal and of course break the daily time frame down into smaller time frames to see that signal perhaps before it appears on the daily chart. Now, speaking of signals and speaking of where the market is, when you take a look at the TRP buy signal here and the target 139.49, we did get a TRP sell, but in an uptrending market off of lows, what are sell signals? Typically, when broken back above, they can become fresh re-entries. So I'm looking at that TRP buy signal that came with a Pro RT buy signal, came with some positive momentum shifts, and that target 1 as an interesting area for us to be gunning to. But the doorway to get there is indeed getting above the top lip of the channel. The value of the top lip of the channel is around that 38.45 marker. Getting above there opens the door for potentially more to come, i.e. snapping up to retest the highs over here. Now, in today's market, I noticed that we started off the day in sell zones, by and large, in time frames underneath the daily chart. Okay, we had a 4-hour, 1-hour chart that were on sell zones, but we were in counter trend bounces that were confirmed. What does that mean? Well, you're in a sell zone over here, you've got the fast speed line above the slow, and that crossover there, along with signals associated with it, confirm that we're in a counter trend bounce, where price action may be trying to make a beeline up and towards the channel. Now, this can be on any time frame. So what we saw were those types of setups on the 1-hour and the 4-hour chart, opening the door for me to try a little bit of long side trading today. So using the same tools, techniques, and strategies that you've heard Rob teach about over the last couple of ITP sessions he's done in the last week, well, I use those, put them to work with one contract trading, 3 trades to gross over $400, about $425, as you can see on the bottom of the screen on my dome. And I did that live in front of members start to finish on the trades. Now, I can't guarantee that these types of results are normal. Can't guarantee the results that I can make these results day in and day out. Now, for those that are looking at the outlook for the market from here, a break above that 38.45 opens up the throttle for us to potentially rise. However, if prices get stuck in the lower end of the channel again and happen to come back down and we see 37.50 break, well, the story goes a little more sour at that point, and we indeed come back into a spot where one would question whether or not this market does have enough gusto to keep going. So from election to bond auction to inflation data, a busy week ahead. Very much looking forward to seeing you back here for videos just like these in the near future. Be safe out there, happy trading, and look forward to seeing you at the next video. Bye for now.